Hey guys, it's Wayne Scully, author of 21 Tax Topics to Stay Compliant and Save Money, available for free at leanonme.info. That's LIENONME.info. Guys, I'm going to walk you through how to complete a Form 433 AOIC. Well, actually, not fully completed, but partially completed. I'm going to focus on the income and expense side of things. That's the monthly income and expense that's going to basically show the IRS what you can and cannot afford to pay on that tax debt. So, guys, I hope you enjoy this. If you have any questions or comments, definitely reach out to me. www.lienonme.info. Yes, our taxpayer's name is Randy. He was married. Heather, as you can see displayed on the screen. I split the screen. You'll see Randy's pertinent facts. The left of your screen, on the right of your screen, you'll see the Form 433A, which is what we're going to use to determine their eligibility for an offer and compromise. So Randy's income, again, you can see this for yourself. His home price is $205,000. That's the median price of homes in this area. He's a broker. He splits 70-30 with his brokerage, and his annual income 51,756. Now, guys, I'm not gonna go through every single detail here. Neither am I gonna go through everything on the 433A form. I just want to kind of give you a flavor for his situation. You see his income tax is $2139, AGI is $38,480, self-employment tax $5850, and you see his assets and debts. He has a Daewoo 375,000 miles, which is, I mean, that probably needs to be updated, right? He also has a Roth IRA, $9,500, credit card debt, $15,300. We need to know this as tax professionals, what credit card debt he has, but more importantly, the fact he has a credit card, the IRS may look at that as a way to pay them, believe it or not. So they may say, hey, you can leverage your credit cards to pay us what you owe, depending on the balance, of course, and his credit line as well. So you look at his expenses here, you see his copay for doctors, prescription, oil change, all these different things. Some of it relates to his business, some of it relates to him personally, and some of them are a toss-up, like restaurants. Well, $240 a month could be restaurants taking clients out to meetings, or it could mean instances where he's actually eating out personally. And that's really important to know. Groceries, of course, that's a personal expense, most likely. And gas in his tank, that's for his car. So as a real estate broker, you're doing a lot of driving. Like I said before, Randy has an ex-wife with her heartbreaker. So, and his name is Randy Realty. That's that. So let's get into the 433. As you see here, 433A, again, this is IRS's way to gather information about your financial situation to see about your ability to pay. You know, how much and what, program you may qualify for. He's not a wage earner, so it doesn't apply. The meat and potatoes of this form, I mean, there are some really important items that we need to be aware of. But if you're completing this form, the financial information is going to be the main driver in determining what program you qualify for. So again, I'm going to skip sections 2 and 3. Again, could be important. We look at whether you're a party to a lawsuit. That could be important because what? If you're receiving money, the IRS wants to know. If you're going to be the one paying money out as a defendant in a case, they need to know as well, and we need to know because that's going to be something that we can use to lower your expenses. Same thing with bankruptcy. That's going to be another key thing as well. The IRS wants to know if you're filing bankruptcy. As a matter of fact, bankruptcy may actually impact the CSED, or collection statute expiration date of your debt. I'm going to kind of go down to here again. Cash in the bank, cash on hand. It's pretty self-explanatory. As we move along, digital assets, this has come up lately. Used to only be cryptocurrency, now it's NFTs, smart contracts. So anywhere where you have a potential to make money, or where you have assets where you could sell to pay the IRS, they want to know. Okay, available credit. If you have $100,000 credit limit, maybe they'd like for you to leverage that credit card to pay them, right? And maybe it's cheaper to pay the credit card than it is to pay the IRS in terms of interest and penalties. So that's something to also consider. Life insurance policies, they want to know if you have a cash value life insurance policy. That's an asset that you could potentially leverage to pay them. Okay, if you have a very expensive car and you could fetch and you fully own the car, or if you don't fully own it, clearly it's potentially something that they could want you to sell to pay them off. Personal assets, again, like jewelry, furniture, that type of, again, if it's something that they could potentially get money from to pay for them to get paid, they'd like you to sell that stuff. So, but that all impacts your overall, because once we figure out how much your net difference, as you see here, net difference right here, they call it reasonable collection potential. That's a number that's important, but also the equity in your assets, that's also important. Okay? So anyway, again, in his case, we did the math already. He's got no wages, right? Doesn't have a spouse, that doesn't apply. His net business income, as you can see, there's a notation here, right? Number 2, and these notations are really important. Net business income, enter your monthly net business income. This is the amount you earned after ordinary necessary monthly business expenses are paid, and is the amount from page 6, line 89. Now we're not gonna go to page 6, line 89. We're not gonna do that. I've already done the math. His net business income is 3,450 based on these facts. That's really the only income he has. If you look at everything here, he's got the house, right? That's an asset that would go above this section here. And that's pretty much it. He's got no retirement stuff, no social security, right? He's got none of that stuff, right? So that's his only source of income, 3,450 from his business. And then you see 2 columns, your actual, and your actual is what you actually spent, right? And then the allowable is what the IRS will allow you to use to reduce your gross monthly income to get to the net difference. And it depends on what program you're looking to qualify for, but for this example, we're looking at the offer and compromise. So in that case, let's get on with it. So I've done the math, right? And his actual expenses for food, clothing, and miscellaneous is $750. And again, we're looking at these expenses on the left, and that's the number we're coming up with, right? $750. Okay. Now again, you see there's a notation here, or annotation, number 7, that's down here, and they're telling you that total of food, clothing, housekeeping supplies, personal care products for 1 month. The miscellaneous allowances for expenses incurred that are not included in any other allowable living expense items. Examples are credit card payments, bank fees and charges, reading material, and school supplies. So make sure you stick all that stuff in here on line 35. The allowable expenses, and I can actually edit this document and type that in for you. So probably I can't edit the document. This is a form directly from the IRS, and they're very finicky when it comes to stuff. I'll show you the final document, as with the allowable expenses. So this number happens to be, these numbers do change from time to time, I shouldn't say, and I'll tell you that you go to the national standards to get these amounts, and in this case I believe the amount is, so because it's a 2-person household, if you go to the national standards, there are standards for allowable living expenses. The question then becomes, which number actually moves to the form 433 when you are preparing to put in your offer? Well, it happens to be the higher of the 2. It's going to be the 1,389. That's going to be the number that's going to be a move on from this to your offer and compromise. All right, so then let's go to line number 36. In this particular example, based on Randy's expenses, again, I'm not gonna go through and show you the actual math, if you will. But in this case, is housing and utilities based on his county. His actual is 1712, but based on his county, the allowable expense would be 1853. So actually, let me double check that one. Just want to make sure I give you the most current information. So he lives in Orlando, Florida. So again, let me give you the most current information on that. I'm not sure what county Orlando is in, but Orange County. So I'm a New Yorker. I'm in that county, Orange County. That would be for a family of 2. So in that county, the number would be 2234, right? 2234 would be the allowable amount. However, that's the max. That's the highest you can go, unless you can show a reason to go beyond that. Let's say you have a disabled dependent that lives with you, or has to come to you ever so often, based on a court order of some sort. Then the number could be higher than 2234. But in this case, you're allowed to take the lesser of the 2. So and he's a bit stuck with 1712 on the 433 AOIC, offering compromise. That's a number he's going to use. Then we move on to a vehicle owner cost, I should say. In this case, it's going to be $50. And then as far as the vehicle operating costs, it's going to be $167. 375,000 miles. He probably would be best served if he upgraded his vehicle, and it probably would help him to increase his expenses. But anyway, for the purposes of the offering compromise, because why give the money to the IRS when you can use it to better yourself, increase your income, and so forth, and at the same time lowering the amount of money you give to them, as I said before. No public transportation. For health insurance, you got prescriptions. Prescriptions may go in the miscellaneous category, or out-of-pocket health costs, actually. Okay, so which is our next category? $10 for prescriptions plus $25 for doctor co-pays. What else do we have? Nothing for court-ordered payments. If you're receiving that, it's not the same as paying it, and if you are paying it, it's not an item of income. Okay, that happens a lot with my clients. They send information over to me. They're calling income and expense, and vice versa. So just be careful of that. No child dependent care costs either. Figuring his son is a teenager, so that wouldn't apply. And then for life insurance, we have $35 goes here. There are no standards up for those amounts per se. So whatever you incur, as long as it's reasonable. If it's crazy, then you have to explain why the amount is outside the range, if you will. And that's it for him. So the total living expenses for him is $3124, and the net difference is $327. All right, that's the amount he has left that he could pay an installment agreement or an offering compromise, right? I mean, with the offering compromise, you basically take that number and you multiply it by 12 or by 24 to see how much he would pay in total, and you compare that with what he has to pay based on the most recent CSET date. So basically, once I show you the other document where you'll see the analysis, you'll see that the total living expenses that the IRS will allow is $4,448, right? However, what's going to actually move to the 433A is a smaller number, 3824. Okay, because again, you're limited in some instances. Actually, I should take that back, because the numbers I have not been updated. So I'm going to now show you what the final analysis shows in terms of what amount is allowable per the IRS and what amount will move on to the Form 433 EOIC. So here we have the final amounts. Make this a little bigger here. So you'll see that again, it's business income was 3450, no other sources of income. And then you see, as I mentioned before, the actual, right, based on the fact pattern here on the left. And when we total all those numbers, we get 3124. So the math shows that the difference between the total expenses or the total living expenses and the net business income is 326. Okay, and then the total allowable expenses, right, for the standards, the national standards for food, clothing, and miscellaneous, and the standards for the county where you live as far as housing and utilities, we add, and then these are actual expenses, right? So these are expenses they would allow based on that the county or based on that particular line item, right? So the standard for vehicle operating costs, the health insurance, there's no standard for that, and so forth. As vehicle operating costs could be higher too, and health insurance, out-of-pocket health care costs, life insurance, and so forth, right? So all those are total to 4923. The difference between 4923 and 3450 is 1473. Am I right with that? 4923 minus 3450. Yep, 1473. And now what actually moves over to the Form 433 OAIC is 1386171. As you can see, this number on line 35, you take the allowable. They allow you to take the allowable amount. Whereas with the housing and utilities, you're limited to the actual. So, but you can go up to 2234. If you go beyond that, you have to explain why you're paying so much for housing and utilities. And there could be a reasonable explanation for that. As I said before, you may have a disabled child and you need to have special amenities, which will cost more in rents or in a mortgage. And so that may be justified. And then as far as the ownership cost, you get to take the actual, not the allowable. Same for the vehicle operating, and the other ones are pretty much just the same. So that comes to 3918. The difference between 3918 and 3450 is 468, right? So that math. Okay, so what does he qualify for then? Well, most likely he could probably get currently non-collectible status, being that he doesn't have the ability to pay right now, right? So he's underwater, right? His expenses are more than what he earns. And just so folks know, the IRS does look into the future to see your potential for earning other income. That's why they ask you those other questions about bankruptcy and that sort of thing. So those things could be a factor. But as of right now, he could qualify for currently non-collectible status or a partial pay installment agreement, right? So that's where you basically say, IRS, can we just pay you some number? Usually I'll say $25 a month. If the IRS accepts that, that's great, and so forth. And which is the subject of this conversation. You know, we could make an offer depending on this collection statute expiration date, which is the time the IRS has to collect the debt from you. If you're close to the collection expiration date, then we may go a different direction. We'd make some offer, an amount that he would borrow from friends or something like that, because clearly he doesn't have the income to support that on his own. So he could leverage an asset that he has, maybe the house that he has, maybe take a loan to pay that. But again, to be able to do that, you have to qualify to get the loan in the first place. And oftentimes clients with these kinds of issues, they have issues getting, we can talk about that at length. I don't want to go into that. It's all the scope of this conversation right now, but you can actually, if you get denied for credit, which is what the IRS may want to see, then that's not gonna likely happen that you'll get that loan to pay any amount of this debt. So anyway, guys, that's all I have for today. just wanted to walk you through, how the offer and compromise, this piece of it would look. There are other elements to the 433 form. We're not going to go through that again. The idea here was just to walk you through the monthly income and expenses. That's really critical to the entire process. I mean, other things are important, but this is super critical. So, guys, that's it for me. I'll catch you later.